Good afternoon, ladies and gentlemen. We are happy you could join us for Bigbank's investor webinar. Today, we are hosted by Bigbank Chairman of the Management Board, Martin Länts, and Member of the Management Board, Argo Kiltsmann. We will start the presentation with an overview of Bigbank's and its public offer of subordinated Tier 2 bonds and continue with a live Q&A session. If you would like to ask questions to the company during the presentation, please use the Q&A section underneath the presentation in Zoom menu by clicking on the Q&A button. But now I'm handing it over.
Hi, I'm Martin Länts, CEO for Bigbank AS. This is our investment presentation, which is second series emission of our subordinated bonds program in total amount of 30 million euros. The program started in last year, November, where we had also our first issue in an amount of 5 million euros. And to start with a small legal disclaimer, today's presentation can be taken as an advertisement material, not as investment advice. Your investment decision should be based on our prospect, all the public information available on our bank website, and of course all the public announcements made through the Nasdaq system. This information regarding this presentation cannot be shared in US. The bonds can be subscribed in Estonia, Latvia, and Lithuania. And all the forward-looking statements are forecasts, and these should not be taken as for granted because, you know, we never know the future exactly. We can give us just kind of some guidelines, but these are not the things we can base our decisions on. And to start, then small introduction also about us. As said, my name is Martin Länts. I'm the Chairman of Management Board for the Bigbank AS. I have been working in a Bigbank since 2013 when I started as the head of Estonian operations. Throughout the years, I have carried many different roles, being responsible for the group sales and marketing, for the customer relationship management, product development, debt collection. I have been the member of management board since 2017, and from 2019, I have been acting as a CEO. And together with me here is Argo, so maybe a few words also from your side.
Thanks, Martin, and hello, everybody. My name is Argo Kiltsmann, and I have been in Bigbank for 12 years, since 2012, and have been also in different positions. All have been in finance area, but now I am as a head of finance area and also member of the management board since 2019.
So to continue, a short overview of Bigbank AS. We are Estonian credit institution, which is operating through its branches also in Latvia, Lithuania, Finland, Sweden, and Bulgaria. And we also do have cross-border operations in German, Netherlands, and Austrian market, where we mainly offer deposit products. If we look on the high-level numbers, then the total assets of the bank are a bit over 2.5 billion euros. We are active on 9 markets, as said. Our loan portfolio is close to 1.8 billion euros. We have more than 157,000 customers. Our deposit portfolio is soon over 2.2 billion euros, and we have a bit more than 500 employees. If we look at the legal structure of the bank, then the bank belongs to 2 Estonian private individuals, Mr. Parvel Pruunsild and Mr. Vahur Voll, who both individually own 50% of the bank shares. as told also on the previous slide, we operate through our branches in Latvia, Lithuania, Finland, Sweden, and Bulgaria. And we also have investments, either agricultural land or also real estate premises, which is rented out, or also, where the bank itself operates. And last year we also had one company, Palupere, which was also acting in agriculture itself, but this activity has ended. Still the lands belong to the group, but operational activities have ended, and the bank is through its subsidiary renting out agricultural land. Our supervisory board consists of 5 members. Mr. Sven Raba is the chairman of the supervisory board, and the members are Mr. Vahur Voll, Andres Koern, Jaan Liitmäe, and Juhani Jääja. Bigbank's product portfolio can be separated into 2 lines. One is retail banking, other is corporate banking. In both of those business lines, we do offer loans, leasings, and deposit products. If we look at retail banking, then historically, Bigbank has been known probably through their consumer financing, but today one of the fastest growing product lines is, of course, housing loans. We also do offer hire purchase, credit card product, car leasing, and we finance the loan giving mainly through deposits, either fixed term deposits or saving deposits. And which is the main difference between these two is that in case of fixed term deposit, a customer will deposit his or her money in Bigbank for a certain term, for example, for 1 month, 3 months, 1 year, or even 10 years. Then in case of saving deposit, the customer can put his or her savings into Bigbank and can very operationally take this money also out from Bigbank within 3 days, but still earn considerable interest compared to the offering in his or her home bank, and earn also money on the savings that may be also used on an everyday basis. Regarding corporate banking, the biggest business lines are investment loans and development loans, but we also do offer some unsecured small loans, car leasing, equipment leasing, and same as in retail banking, companies can deposit their money either as a fixed term deposit product or saving deposit. If we look back to the history of Bigbank, then the operation started in 1992. Back then, yet not as a credit institution. The credit institution license was acquired in 2005. And soon after that, also the bank started to provide cross-border services in Germany, Austria, Netherlands, which gave also a strong boost of the financing, and at the same time, different branches in different countries were opened. In 2014-15, bank's business model was changed, and if until that time, Bigbank was maybe known a bit more with offering loans to more riskier customer segments, then from that time we started to compete with local universal banks on the markets we operate. And I can say that today a lot of people who make a home loan application to Bigbank, they probably get a better offer from Bigbank than they get from their home bank. Then in 2022, from that time we have Moody's long-term deposit rating of Baa3, We launched a credit card product and had also public T2 bond issue on Nasdaq Baltic bond list. In 23, we had different bond issues, either T2 or closed 81 bond issues. We launched saving deposit products in Finland, Estonia, and Lithuania. And in the start of 24, we have started to offer also the saving deposit product in Latvia and term deposits also in Lithuania. So now our customers throughout all the countries can bring their savings to Bigbank. And Argo maybe will give us a short overview of the financial situation of the bank.
Yeah, thank you, Martin. And yes, I will. First of all, let's look at the profit and loss statement, most important figures of recent periods. You have here 2022, 2023 full year numbers, as well as this year's first quarter numbers compared to last year's first quarter figures. Interest income and interest expense both have grown very rapidly throughout the recent years, and also the last quarter was the same. You see that 17% was the net interest income growth in the first quarter of 2024. It is a little bit smaller than the 19% growth in last year regarding full year growth numbers, but it is still a substantial number. And yes, our interest income growth has mainly come from our portfolio growth. Interest expense, of course, the same way. Our savings and the term deposit portfolio have grown a lot, but also the interest rate environment have had its role in here. But all in all, net interest income has had a steady growth, and it is still continuing. If we look at the cost side, you can see that the salary cost, other operating expenses, both have increased, but this growth has been rather, let's say, relatively small compared to a net interest income growth. But regarding now first quarter of this year, you can see that provision expenses as well as net loss allowances on loans have both increased quite a bit. And this has an effect for our net profit figure as well. Last year's first quarter net profit 9.6 million euros. This year's first quarter net profit 6.4 million euros. And it is mainly a result of this net loss allowances on loans and provision expenses, why the net profit has dropped. What can I add here is that mainly it has come from our consumer loan portfolio, such result, and the worsening of consumer loan portfolio has indeed happened. Yet, if we look at the further slides as well and look at the historical figures, we can state that this overall non-working portfolio is not on a bad level. It's a very okay level. But compared to the very good 2023 results, some worsening has happened there. Yes, we haven't included here, of course, the April results, but these are already also published by us in Nasdaq. So I can already state that we see improvements regarding net loss allowances in April. And of course, we aim to have such better results for the remaining 2024 as well. But as Martin said, this is a projection, not a sure thing. But of course, we aim to get these costs under control in this year. Here I must also took out one additional thing. In quarter one results, we also made a mistake improvement, or let's say correction in our further years. 2022 profit and loss statement was changed by 3.0 million euros, and last year profit and loss statement was changed by 0.2 million euros, both in negative ways. Why? We identified a mistake in our effective interest rate method calculation, which basically means that periodization of income and costs related to issuing loans has been not correct. And now this mistake is corrected, and it had an effect for previous year's profit figures. This year profit figure is also, of course, okay and correct and this effect didn't had any influence on Q1 results on 2024. If we move forward, we can see here in this slide our balance sheet, most important figures, as well as some important ratios. Logic is the same. We have 2022 end of the year results, 2023 end of year results, as well of Q1 and results for 2023 and 2024. Our growth story has basically continued. This is what we can conclude from here. Yes, the growth was already there in 2022 and before, but in 2023, our total loan portfolio grew by 23%. And now in Q1, compared to the end of last year, same quarter, the growth is 24%. So still double digit and very strong figures here. And yes, we now have reached 2.5 billion euro balance sheet, and also loan portfolio itself is almost 1.8 billion euros. How we finance it? Mainly through our deposit portfolio, which has grown to almost 2.2 billion euros, and of course by our equity and somewhat by our bond issues as well, but main financing part is definitely deposits from customers. If you look at ratios, maybe we should concentrate only the most important one here, return on equity, which is the third bottom row in the below table. You can see that our return on equity improved to 17.7% in 2023. And in our strategy, we have also stated that we aim to get to 20% return on equity. So there was a definite improvement compared to 2022. And we can see that based on this Q1 profit, our return on equity has dropped to 10.5%. And here I can only add that definitely due to improving our profit figures by getting the loan loss allowances in the next quarters in better shape, we definitely intend to improve this figure as well, but this is a projection. If we now move on and look how our loan portfolio looks like, if we take it into pieces, we can see that regarding geographical distribution, majority of our loan portfolio comes from Estonia, 42%. Then the next one is Lithuania, 34%. Next one, Latvia, 15%, and then Finland, 7%. Sweden and Bulgaria give already much more less here. Our corporate banking percentage from total loan portfolio is constantly growing, which is also logical considering our strategy, which states that our focus products are corporate banking products and home loan product. And you can see that already more than a third of our total loan portfolio is from corporate customers, 34% by the end of Q1 this year. If you look at how the portfolio is distributed based on different collaterals, then also both corporate banking growth and home loan growth have made an impact here, and already 56% of our portfolio is secured by real estate, and 37% is remaining as unsecured loans. Below, you can see also some columns which show the portfolio developments. On the left side, you can see in percentages and absolute figures how our loan portfolio has grown from 2022 to 2023, 23%. And now if only considering comparing end of Q1 this year to end of last year, then 5% growth comparing these figures, and in absolute figures, almost 90 million euros. Loan portfolio quality, you can see that indeed that by the end of 2023 and also by the end of this quarter, first quarter of 2024, the delayed portfolio has somewhat grown. 30 days or less in delay has grown from 2% to 3%. And also the next stages like 31 to 60 days, 61 to 90, and 90 plus has somewhat increased. But all in all, if we compare the overall percentage from total loan portfolio, then we can see that this is still not high percentage what is in delay, and the growth itself in percentage point wise hasn't been substantial, but there has been some growth in it. Now, if you look at the deposits, how these are distributed, then we can see that basically we have a quite similar amount of term deposits and saving deposits. The difference was already covered by Martin. And you can see that the growth in recent periods has been bigger in our savings deposit portfolio. And now by the end of first quarter, it is even a little bit bigger than our term deposit portfolio. Growth rates in the first quarter compared to end of last year for both products, 11%. If you look deposits breakdown by countries, we can see that most of our deposits come from Netherlands and Germany, 48 and 34%. And next one is Finland at 8%. Other countries give less already to our deposits portfolio. And deposits breakdown by maturity, you can see that yes, savings deposits are basically on-demand deposits, and other groups are relatively short period deposits as well. Within 3 months, we'll be ending 7.5% of our deposits, and less than 12 months period is 23% of our deposits. So this is actually it from my side for now, and I will give word back to you, Martin.
Thank you, Argo. Here you can see our strategy 2022-2026. Our plan is very clearly set on growth. We have shown strong growth numbers in recent years. Also, as Argo told in the beginning of this year, the source of our growth, of course, is our customer-centric approach. And we aim to increase our return on equity to 20% level. Our main growth is coming through housing and corporate loans. Why these products? It is because these products have often a longer maturity, and so they can guarantee you long-term interest income and, of course, bring more efficient operations. If you compare to the consumer lending, then even you can give out 5 to 10-year loans, but often they have an effective maturity of 3 years because many of those loans are prematurely repaid by the customers. To achieve this growth in these 2 segments, for consumers, the housing loans, and for corporate customers, different investment or development loans, then we always look for the possibility to provide customer reasonable product conditions. And this is not only the interest rate, but also we aim that the text in the small print would be reasonable for the customer. We tried to find different underserved customer segments. For example, in housing loans, a few years ago, we brought to the market special schedule product where customer could postpone his or her principal payments to the end of the schedule, and up to first 20 years, for example, pay only the interest, and within the last 10 years of the loan schedule, pay also principal loan payments. And yeah, like with this growing interest environment, the interest for such product is lower, but still we see some customers, especially when buying the new home, using this product and often taking this special schedule for the first few years, because also if you buy a new home, your obligations are often bigger. You need to buy, for example, additional furniture, or you want to have some additional buffers if anything happens. We also do want to be risk leaders, not just to take bigger risks than everybody else, but rather to really understand what risks we take, how to mitigate these risks, and what are kind of these things and how to kind of mitigate these things together with the customer. And of course, if we talk about the housing or corporate loan products, then it is very, very important to have excellent and fast customer service through competent employees, because usually these people need consultation, and we need to find best solutions together with our customers. In the second pillar of our strategy, we talk about IRB, internal risk-based approach regarding capital requirements for credit risk. This is a very much banking-specific topic, but it is a method how you can apply contract customer-based risk weights to your loan portfolio. And our aim using it is in the long term to actually reduce the capital requirements acquired, applicable for the bank. And for that, first of all, of course, we need to ensure that we have a good quality product portfolio, taking into account the probability of defaults of the contracts, the collateral values of our loan portfolio, and so on. And in order to achieve it, we have to have appropriate marketing activities, sales activities, keep also the existing loan quality on a good level, and ensure that we have high quality of data, and we really take these models into use. And from a regulatory framework, it is so that first you need to use them for the 3 years, and then if it is confirmed by the regulator, you can take it into use. The next pillar talks about our real estate investments. And if we talk about agricultural land, then we aim for the long-term value increase of the collateral, meaning the land as such. And if we talk about real estate objects or cash flow objects, then we are looking for the strong and stable cash flow, and this should bring us also the income. And these investments and being active on this market gives us also a very good opportunity to know a lot about agriculture business, to know a lot about real estate business, so that we could be better consultants to also our end customers. And last pillar on this white background is entering to the daily banking. And this we want to do in order to tie customers stronger to Bigbank, to improve marketing efficiency, and of course provide the bank with cheaper financing. So if we look at today's financing structure of the bank and look at the savings or term deposits, then the saving deposit interest rates start from 2.9%. At the same time, if you look at the customers' money on their home bank, on their current accounts, they usually get either 0 or even less than 1% for the money. So we see a lot of opportunities on this market to provide these customers good terms. And last, if you go to this green pillar on the side, then here we talk more about organization and organizational culture. Here, what we do believe in Bigbank is we do believe that great leadership is very important, and we have this small vision that in the long term it could be so that if a person after 5 or 10 years would be asked that where he or she had the best leader, that he or she would answer that it was in Bigbank. And we believe that good leaders support their employees' professional development. They help their people to achieve their goals, and that helps to bring also good results for the bank. We also do want to build sales and business-oriented organization culture. Of course, there is a very high knowledge of banking, but we believe that banks are made for making business. They are responsible for guarding depositors' money, at the same time to pay the interest to make reasonable business with that to give out reasonable loans where to earn the interest income. We improve our brand consideration and ensure high recommendation, of course. We do grow mainly organically, but we also consider non-organic growth. For example, also acquiring, these different real estate objects, but we don't also say no to acquiring, some loan portfolio if it is on reasonable terms or other such possibilities. And we do use scaling to spread our products to the existing and new markets. We have our own built banking system, Nest, which is in use in all of the countries of operation. And in case we launch a new product in one or another country, it is actually quite easy to scale this product also to the other country from technological perspective. We do use lean methodology and technological solutions to develop good processes both to internal and external customers. In climate neutrality, we see opportunities, not restrictions. And of course, in order to achieve 20% return on equity for the shareholders, we believe that cost-efficient operations are very much vital. And this is a quick peek into the strategy of Bigbank. If you have later on any questions, feel free to ask or write the question right away to the questions and answers board, and we will take these questions at the end of presentation. But now I would give back the word to you, Argo, so you could give us the overview of the current bond issue. Thank you.
Yeah, thank you, Martin. And let's indeed continue with terms and conditions of our current Tier 2 bond issue. As we started, this is a second series of our existing T2 bond program. Total amount of the program is 30 million euros. This second series is issue size with 3 million euros, which can be increased up to 10 million euros. And the nominal price of the bond is still the same, 1,000 euros. Important is to take out that subscription period started yesterday, 14th of May, and it ends on coming, not this coming, but next week's Friday, 24th of May. So there is still time. And the maturity of a bond is 10 years. Yes, after 5 years, with permission from FSA, we can buy back these bonds, and this will be Bigbank's decision if FSA approves. So the bond maturity will be from 5 years to 10 years, which is a maximum maturity of this bond. What is now changed is that the coupon rate, the interest rate is 7%. Considering existing interest rate environment, our own results, and the fact that this bond is at least 5-year maturity bond and up to 10-year maturity bond, we find that this pricing is still attractive and worth considering. And regarding interest payments, still the same story, quarterly payments. Each quarter after the issue, first interest payment period is still a little bit longer. 15th of September is the first interest payment date. After that, exactly after each 3 months, will be interest payment date. We are offering the bonds not only Estonia, but also in Latvia and Lithuania, which are 3 of our biggest home markets. So we will continue to do that, and we are doing it this time, of course, as well. I will quickly go over also for what we are using this bond issue for our activities. So basically for 3 things. We can refinance already our existing bonds. And of course, we can cover our credit risk rising from growing portfolio, especially from corporate loans and housing loans, which is our strategic products. And if there will be any additional capital requirements applicable for us, then we can cover V's, of course, with this additional bond issue as well. And from table on the right-handed side in this green background, you can see also how much capital we have right now. Tier 2 capital, we have end of Q1, 231 million euros, growth from end of last year, almost 10 million euros, and Tier 2 capital, 58.7 million euros, 0.3 million euros less than end of last year. Why this thing is happening is that one of our bonds is slowly amortizing, and it means that it will be after each month a little bit smaller figure there in Tier 2 in this year until we haven't refinanced this bond. So this bond issue, of course, will move to this Tier 2 capital. So this strengthens our Tier 2 capital position, and we can do activities what I covered previously with this bond issue of what we are having right now. So this is it from my side. If there will be questions, or maybe Martin, you want to comment something extra, then I am finished with this description of our ongoing series.
Thank you, Argo. And yes, we are open for questions.
Thank you for the presentation. I will now take over. Currently, we have not received any questions, so please, everyone participating, if you do have some questions, type it in to the question and answer box. So let's give everyone a minute or so to think, and at the same time, I will just conclude and do a quick summary that the recording of the webinar will soon be available online as well. And please definitely follow Bigbank announcements to stay up to date with company's news, or visit Bigbank's investor page, investor.bigbank.eu. But so far, so long, let's wait for a minute. Seemingly, Martin and Argo did a good job explaining every detail, so we have not received any questions. So with this, thank you everyone for joining from my side. If you have any questions later on, please submit them using an email address, investor@bigbank.eu. And thanks, and final words from you.
Yes, thank you for participating and listening for this presentation. If you consider making an investment decision, then also please read our prospect and get acquainted to the information presented on our homepage, including the public annual reports, and of course, all the announcement made through the Nasdaq Stock Exchange. Thank you for participating.
Yeah, thank you for participating. And if you have read everything and still have questions, write us and we will give you an answer even then.